You are listening to ChartingWealth.com's Training and Trends for Friday, the 14th of August, 2015. We'll brighten up the screen a little bit there. Well, we always do training when we start the show, and as I was writing today and planning out the vision of what we continue to try to do here at ChartingWealth.com, I wanted to break down for you without getting to the charts. The charts are important. We're going to get to those in just a minute. But before that, I just want to have your rapt attention for just a minute and talk about what our vision here is all about at Charting Wealth. The first is to get you engaged. That is to help you realize that it's your money, it's your life, it's your future, and that you can be empowered to understand how the markets work, whether you manage your money yourself or you have someone else manage it and you oversee it. But let me tell you, the important things in life we need to do for ourselves. We need to be empowered. Charting Wealth is a name that I picked for a specific reason, and that is so you can chart your wealth. You can use the stock market, and that's the next thing that we do. So first we engage, then we empower you by teaching you what investing and trading is all about via the stock charts, how to read a chart, how to understand, hey man, why am I still in this investment when it's going down like a sinking stone? Or why am I not in this investment when it's going up like a rocket ship? That is really what we want to do, is first engage you to realize, have that vision of then being able to be empowered with the training to learn what the market's about and how to see which way it's going. Whether it is the different charts that we look at every day, and you know what those are. That is indeed the total market, that is the SPY. It is the Standard & Poor 500, of course, that's what SPY is. IYY, which is the total market, and the Qs. I was trying to flip through those and I got myself, there we go, that's IYY, total market, SPY, the Qs, and then finally gold. Now, after you've been engaged to think about this and to start training, after you've been empowered to actually take the training, start learning this stuff, and it's lifetime learning, but you can get started quickly. Then once you do that, our next step and final step is to keep you motivated to spend a little bit of time on a daily basis, just a little bit of time every day, because what you literally concentrate on and you measure, you're able to perfect more and more and more. That's how you get good, is spending a little bit of time daily. That's why we do this broadcast. So that is our vision that I just quickly shared with you. Now let's jump into the charts. Okay, IYY. That's the total market. What's going on with it? Well, those of you who are watching, and I'll explain to the people that are joining us via podcast and audio, we saw the chart cross over between the 10th and the 12th. That was Monday and Wednesday, going down on the 2-day chart. Today, where over the last 2-day candle, where did the markets end up? Well, the derivative oscillator continued to heat up. The actual MACD lines continued to diverge. But we saw what we call, it looks like a cross on the chart. It's a little green cross. That is a doji. What does that mean? Lots of indecision. Still the movement's all below the 2-day trend line, but that's what we see happening on the total chart today. If we quickly file back and look at what happened throughout the course of the day, it ended the day yesterday, if you will recall, with a little bit of a bump up, and then in the morning, more movement up, and in the afternoon, more movement up. In fact, there was even more movement, but the bears were able to drag the bulls down. Looks like IYY, the total market's attempting to cross over, going up on the 4-hour, the half-day chart. What does that mean? Well, till it pushes through the 2-day trend line, it doesn't mean necessarily a great deal to us. It's not even crossed yet. It's starting to cross, but hasn't. So we're still in a confirmed downtrend on the 2-day chart, not yet crossing even on the 4-hour chart. Let's quickly look at SPY. We'll track back out to our 2-day chart. We see pretty much the same thing, even more of a doji, really just a cross is what it looks like. And we see, again, diverging of the MACD and the signal line. and a growth in the derivative oscillator. So still a confirmed down move on the 2-day chart. We look at the 4-hour chart. What do we see? We again see up movement, getting close to crossing, very similar to IYY, not yet pushed through the 2-day trend line. Now, for the last of the indexes we're going to look at, we're going to go to the Qs. And we're at the Qs on the 2-day chart. Where's the Qs again? We're tracking a down movement. More divergence, that means more moving apart, not coming together of the MACD. So it's growing further apart. And we see an acceleration in the derivative oscillator. What do we see on our chart itself for the 2-day candle? The most recent one, it is not quite a doji, but pretty close, just about as a little bit further up movement than down movement. But again, very little movement throughout the course of the day. Technically for the day, and when I say the day, I should have said that was the 2-day, the 2-day candle, but for the day itself, Qs was down 0.16%, as was the SPY. It was down 0.12%. When I say 0.16, I mean that's literally 16th of 100th. Okay, so that's not much down movement. But what do we see when we break over to our 4-hour chart? Let's take a look. On our 4-hour chart, we do see up movement. We're not anywhere near crossing over like we were on the other chart. That is the SPY and the IYY. We see our movement still below the 2-day trend line, so we don't have any confirmed crossings on the short chart or the long chart. That's the short chart's the 4-hour half day, and the long chart's the 2-day chart. We have none of that taking place with the Qs. Okay, so confirmed down moves on all of them. Lastly, we have IYY. What do we see? Oh, sorry, we have gold. And let's go to the 2-day chart. What do we see on gold? We see gold breaking over, moving up. We have a crossover on the MACD moving up. And we have a 2-day trend line. We're still above that trend line as far as the 2-day chart goes. Gold was actually up just 0.1% for the day, but it's up in an up movement technically. Let's look at the 4-hour chart and see what we see. We can see that gold on the short chart has broken over. It had pushed up to the top Bollinger Band, but appears to be moving off of that, although we have not had a crossover yet going down on the 4-hour chart. Although the derivative oscillator has lost some speed, we're still above the 2-day trend line. That is where we ended up with gold. Gold again is confirmed up movements, the opposite of the indexes, confirmed up movements on both the 4-hour and the 2-day. Folks, that's where we are at the end of the day on Thursday as we roll into Friday the 14th. Hope this has been helpful. Hope you enjoyed my talk about vision. You want to learn more about how to trade, go to our website. Sign up for our newsletter where you'll get our training for free. You can also explore our website and you can see all the training we've placed on there. You can follow us on Facebook and Twitter and on Instagram. We love to hear from you. Follow the charts every day with us and also listen on Mondays, usually posted around Sunday evening, to our weekly review and forecast. Thanks so much. We appreciate you being with us. Join us every day at chartingwealth.com.